Hey everyone, it's Nico with Legacy Realty. You are a real estate agent and real estate advisor. I hope you're all having a great week. If you have never seen these videos before, the reason why I do these videos is to teach, train, educate you guys about what it means to be a buyer, seller, investor, about what is going on in the real estate market. And my goal is to teach, train, and educate you guys as I can help be a guide and serve my neighbor through the real estate journey. And so I love doing these videos. I love being in real estate because real estate gives me an opportunity to guide people through the real estate transaction, which is sometimes the biggest transaction, whether you're buying a house or selling a home. It's such a huge transaction to be walking through, and it can be so overwhelming and so stressful. And so I love guiding people through that process and then serving them as well. So that is why I love real estate. So today's topic, I want to talk about the September market trends. Every month I do these videos, and every month the Denver Metro Association of Realtors releases the September market trends, or the monthly market trends report. And it really helps us because whether you're buying or whether you're selling and investing, the monthly market trends are a great way to gain understanding into the living and breathing beast that is the Denver Metro real estate market. And so whether the market shifts, when it becomes hot, when it becomes cold, whatever it is, these updates are a great way to figure out what is actually going on in the Denver Metro real estate market and to see what is actually affecting it, whether it's interest rates, whether it's the economy, whether it's inflation, whatever it is. So the monthly market report is a great way to understand the real estate market here in the Denver metro area. So I want to break down the market report. But before I break down the market report, I want to talk about the big idea, the one big idea from this month's market trends, and that is that this month's trend is that the Denver metro real estate market is indicative of a return to a pre-COVID market. So we're kind of seeing our way back to a normal market before COVID ever existed in our lives. Hard to imagine, I know. But so that is the big idea, that we're seeing a market that's returning back to pre-COVID times. And so if you look into this report, which I'll post a link in this post or even in the video of the link. And so if you dive into this report, you will see that it's reported that all of the major statistical category points towards a market that's slowing down and normalizing. So this is a market correction, not a market crash. Two different things. Market crash is not what's going on here. But if you check out the infographic, I'll post an infographic as well. If you check out an infographic of the market overview, you'll see months end inventory. And then you'll also see closed homes. You'll see both average and median prices on closed home prices have all dropped, while average days in the MLS, and this just means that the average time a home sits on the market before it goes under contract, average days rose by almost 50% to 19 days on average. That's more of a normal market. In a normal selling market, your home will probably sit on the market for 2 months before it goes under contract. That is normal. What we've been seeing over the last couple of years, putting your house on the weekend and it goes under contract over the weekend, that is not normal. And so as we get to a normal market, we're going to see that days on in the MLS rise. So while some would take this as a sign of a market crash, Denver Metro has seasonality in its market, and this is an example of that. So although it's difficult to see how the world, how the economy and how the world as a whole has an impact on our market, on the housing economy, interest rates are still the biggest factor in their impact on buyer demand, as it directly correlates with monthly payments. The higher interest rates are, the higher your monthly payments are. And so as we continue to fight inflation, interest rate continues to be a big conversation around this topic because the feds are trying to fight inflation, and their biggest tool to fight inflation is to raise inflation. So I want to ask this question, why do people then feel like it could be a market crash? So I think part of the reason why people feel like it could be a market crash is for a few reasons. One, we've been in this market of the pandemic market for 2 years now. And so we've been in a market that is not a normal market for a while. And so when all of a sudden our market switches from not a normal market to going back towards a normal market, it's all happening so suddenly, it's all happening so fast, and then with interest rates, with inflation, it can cause anxiety. So I can understand why people might think it's a crash. And then the other biggest reason that why people might think it's a crash is because it wasn't too long ago that our parents or people just older than me, I was a kid when the market crashed in 2008. And so it's understandable why people might be afraid or to not want their kids who are buying now. The millennials are the biggest power force in the home buy as home buyers right now. So it's understandable that their parents wouldn't want them to go through the same thing as well. So it's understandable. But if you've ever gone to Six Flags and been on a roller coaster, you experience what it's like to be on a roller coaster. You experience fear. You experience the sinking feeling in your stomach. You experience freedom and joy and all of these things. And if you have been on a roller coaster, you have experienced what this Denver metro market has been like in the last 2 years. So we are seeing a slowing down as we head into the seasonal buyer season market. And although the slowdown is not over, it probably won't be long lasting. And this is because inventory in Denver and the nation is still historically low. And so nationally, inventory is low and has not even recovered from 2020 levels. And interest rates are still a topic of conversation. So again, we're seeing a slowdown, but it may not last forever because again, inventory in the area is historically low still. So I want to talk about now what this means for buyers and for sellers. So if you're buying or want to buy a home, now is the seasonal time as we head into October. Now is the seasonal time for you to begin the buying process. Take advantage of the slowdown as much as you can and take advantage of buyer season. You'll probably be able to get in a home under asking price, maybe even at asking price, and you're going to have more negotiating power throughout the whole process of the transaction. So we again have seen the way the market shifted. It's clear that we're more likely to see a home sit on the market for a little bit. So buyers, now's the time to buy. Sellers, if you're looking to get that massive overbid and you're going to contract in a few days, that's probably unlikely to happen. We've already been seeing those massive overbids kind of go away. And so, but this doesn't mean that you can't capitalize and you can't sell your home for the top dollar. Maybe it means waiting until seller season, but if you have to sell now, it is important for you to understand the expectations of how long your home might sit on the market and the expectations of timing and pricing and how to do those things correctly. So sellers, your home is still going to gain value as we see low inventory levels. But if you are thinking of selling and moving, now is the time to do so. You'll be in the best position to do so. So if you're wanting to get on this real estate journey, whether for the first time as a home buyer or home seller or for the fifth time, I would love to guide you through that journey. And if you have any questions about what you just saw here today, I would love for you to reach out. Let's chat about it. And until next week, I hope you all have a great week.